Welcome to Aha Math and Science. Well, in this episode of Market Pulse, we'd like to discuss whether the market bottom is in or not, especially given that we had a big rally on Friday. So it kind of gave us the question that whether maybe this was the market bottom, or maybe the market bottom is not in yet. So let's try to answer this question in this episode. So for the past week, as you can see, the larger caps, including the SP 500 and also the Nasdaq Composite, were actually up for the week. But the small caps was actually down about 2%, and the VIX was really kind of more or less unchanged, around like 17.5. So it's just like negative 0.4. It's percent. It's almost like no change. And then the 10-year Treasury yield actually was quite remarkable because it moved up another 21 basis points, so or 4.6%. That is actually quite really kind of notable, because generally a few basis points for a week may be reasonable, but 21 basis points, that's a lot. In fact, in the past few months, the 10-year Treasury yield was on this hyperbolic run, and we're gonna have more discussion of that just in a little bit. So let's first take a look at the technicals of the SP 500. So here is a daily chart of SP 500. As you can see, we closed at 43.08 on Friday, and we have really kind of retested this gap area, which is in early June around 42.30 and 42.40. So that gap was closed now. That gave us a hope that the market bottom may be in, but the market actually did not really kind of touch the 200-day moving average, which currently stands around 42.08. We think it will be tested in the coming weeks, and in fact, we also think that maybe go even lower than that. One of the possible target we need to look at is actually the 10% correction level, which is around 41.50. Why? Because you can see that there's a lot of support around this region, which is just around the 4100. So 4150 could be a kind of minimum target, and it could go below that. But this is a very important supported area. So we think that as a likelihood, the market will reach bottom around this support area, which is maybe slightly below 4150. And then of course, if the market go even lower to like the 4,000 level, which is also a gap around here, which is in March of this year, then that could be really kind of change our thesis. Maybe this is not just a simple correction, but until that happens, we can remain open that this is just a regular correction, and the market will resume uptrend afterwards. So that's a technical. And as we discussed, that the 10-year Treasury yield was really kind of on this hyperbolic run in the past few months, as you can clearly see here. Basically the 10-year Treasury yield increased from about like 3.5% all the way to now like 4.8%. So that's like 130 basis points just in a few months. That's huge. On Friday, it reached a high of about almost like 4.9%, 4.887%. That was actually the highest level since July 2007, just before the great financial crisis. And then we know, like from history, any kind of this kind of a parabolic run cannot sustain itself forever. So eventually it has to break down. And the question is just like when. So to answer this question, let's actually take a look. More kind of the technical analysis. One of them is the ISI signal. As you can see, just like a few days ago, the ISI signal touched a high of 77. That's very rare, because anything above 70 is already like a very overbought. So in the past 5 years, there are only 2 cases when actually it peaked above 77. That was here just during March 2021. And then another one was actually just before the market bottom, September of 2022. As you can see, in each of these cases, the 10-year Treasury yield was not that far away from the top. It's not exactly top. The 10-year Treasury yield continued to run a little bit up, but we are pretty close to the top. So in other words, given that the ISI is peaked above 77, there's a high likelihood that we are close to the top, but we are not at the exact top yet. In other words, the 10-year Treasury yield could continue to run up, surpassing 5%. That's totally reasonable, and could even reach like 5.1%, 5.15%. So this is the thing we're keeping kind of eye on that, and we think if the rates continue to go high, then suddenly it's going to put a lot more pressure on the stock market. So the equity market we probably will see a bit of more volatility in the weeks ahead. But you can see it's very close to the top. So usually in another 2 weeks of time frame, the market will basically kind of the 10-year Treasury yield will kind of top, and that's going to be after that. I think that the market can really kind of bottom out. So that's from the 10-year Treasury yield. So what other things we look at? Well, that's the NYSI index, the NYSE summation index. As you can see here, it reached a really kind of oversold level. We're looking at the ISI signal. So that was on Friday, it closed at 6.27. That was really low. And you can see in the past 5 years, there's only a few cases that went below the 6.27. So that's a very low level. And in conjunction with actually also the NYSI index, which is currently standing at negative 653.92. So there are only few cases, the NYSI index was below negative 600. And I have kind of circled here. One it was just during the pandemic, March 2020. Another one is in September 2022, which is just like 2 weeks before the market bottom. In each of these two cases, as you can see, even though the market is very oversold, was very oversold, but as you can see, the NYSI signal continue to kind of come down. In other words, it can become even more oversold. And then eventually, in these two cases, as you can see, the market bottom in about 2 weeks. Basically, we are close to the bottom, but we are not there yet. Just based on two examples, we can conclude that maybe the bottom is not far away, but there could be a little bit more volatility ahead in the next 2 weeks specifically, based on the pattern. So this is what we can tell from basically the NYSI signal. Now, I like to really kind of look at this broad picture, which is compare the current bear market with the previous bear market. We kind of already discussed this chart a few times. As you can see, the current bear market, when the market bottom, this recovery is very similar to the one that actually happened when the bottom happened on October 9, 2002. And another one actually dates back to 1987, December 4. That's when the market bottom. And the current sort of recovery is very similar to these two recoveries. As you can see that on September 1st, we point out that maybe, the correction was over. We were just too optimistic and we were wrong. So in fact, basically 3 weeks later, the correction continued to run, and also the amplitude, I guess the drawdown become even more. So both basically the time frame and also the drawdown continues. And then on another 2 weeks later, as you can see, this now is basically the chart we just had. Indeed, just like what we said, 2 weeks ago, we think that the correction may not be over, and now indeed it happened. But now, at this point, we think that we are pretty close to the bottom. Based on the analysis we just did, looking at the 10-year Treasury yield and also the NYSI, we think the bottom is pretty close, probably in another 2 weeks. But in terms of drawdown, maybe just a little bit further to go, get to a level about 4150-ish, maybe a little bit below that. So that really kind of draws us to this box here. So in other words, we are very close to this lower right corner right at here, which is tells maybe just about another 10 trading days to go. And in terms of amplitude, very close, another maybe 150 points to go on the SP 500. So that's what we kind of currently is our view of the market. So basically, I'm just kind of make a wild guess, both putting down a time frame and also the target level for this correction. So this is probably kind of foolish to do that, but anyway, this is our kind of current best estimate for the SP 500. Probably will bottom around 4150 in about 2 weeks. And then the signal we're looking at, based on the fact that every time for a big bottom, usually the VIX should be going above 30. So we are looking for a VIX that is touching 30, maybe go above a little bit, and that will be the signal we're looking at. And at that time, we can be more confident that the market bottom is in. So again, thanks for watching this video. I hope you have found this information interesting. And really, I appreciate all the support you have provided to this channel. It is your support that actually continues to motivate me to do more videos like this one. So I want to just give my big thanks to all of you guys. So if you have not clicked the like button, make sure you just click the like button. And if you have not subscribed to this channel, make sure you click the subscribe button. And I hope that this analysis kind of help you to have form your own thinking. Market is really kind of wild place. Nobody really knows what will happen tomorrow. So we just kind of make some guess, pretty much like also kind of have some fun. But the most important thing is always kind of take care of your risk, right? So risk management really kind of the top priority in any investment scheme. So thanks a lot for watching, and I hope to see you in the next episode, and have a great weekend.